Today we're going to talk about taxes. When do you pay these taxes? How do you apply for Homestead? Why you should pay it in advance? What month should you pay it in? When should you apply for Homestead? When do you get to keep your Homestead? We're going to talk about all that with Attorney Nick Fiello from JK Closings. A lot of people are not aware that taxes, when they come to Florida, first of all, they're expensive. Secondly, how that works in millage rate, and that they're paid in arrears.
Some of them. Taxes are broken up into two different types. You have the ad valorem and the non-ad valorem tax. They're all paid together in November, but they're broken up based on different year timeframes for when they're calculated.
Most people would want to close by December 31st.
Definitely.
And why is that?
If you can close on December 31st and make that your primary residence that day before January 1st, that's where you move all your stuff, and you declare that as your primary residence, then for that following year's tax cycle, you can apply for Homestead. If you do it after that, then it's going to apply the year after.
When you get divorced, who gets the portability?
There's a benefit of paying your taxes early. You get a discount. Florida's great for that. 4% discount if you pay in November, 3% December, 2% January, 1% February, and then it's due in March.
Hi everyone, welcome to Making Money with Laura Sanders, and I am your host, Laura Sanders. Every week we talk about something to help you make a little money, save a little money, or maybe just help you navigate the crazy world that we live in. Today we're going to talk about taxes. We're going to talk about when do you pay these taxes, how do you apply for Homestead, why you should pay it in advance, what month should you pay it in, when should you apply for Homestead, when do you get to keep your Homestead. We're going to talk about all that with Attorney Nick Fiello from JK Closings. I want to welcome Nick.
Thank you.
Hi Nick, how are you?
Good, how are you?
Good. So first, before we go, I don't know the last time you've been on the show, and I know some people are listening to us, some people are going to be watching us live stream. You've lost a ton of weight, so you've been doing some kind of a journey, and I want to commend you on that. That's awesome, so congratulations.
Thank you so much.
And I know that in the real estate industry, because this all revolves around real estate, it is kind of hard to stay healthy and, you know, stay focused on your self. So
socialization and drinks. That's what the real estate market is about. So yeah, it's
fast food.
Yeah, or fast food.
Yeah.
But you did it with Taco Bell, so.
Yeah, but you got to be very particular. And it's funny, I was just telling a client that, you know, even like you can eat a McDonald's hamburger, and it was actually on a weight loss program that I did back when I was in my 20s, and it was actually a choice for a meal. So.
Really?
Yeah.
So it's all about everything else. It's the external factors.
Yeah. So, you know, a lot of people are not aware that taxes, when they come to Florida, first of all, they're expensive. Secondly, how that works in millage rate, and that they're paid in arrears.
Some of them. So
where are they not paid in arrears? I'll learn today.
Taxes are broken up into two different types. You have the ad valorem and the non-ad valorem tax. They're all paid together in November, but they're broken up. So, and they're based on different year time frames for when they're calculated. So ad valorem or the county taxes, that's the bigger, usually the larger chunk of the taxes. That is paid in arrears. That's paid in November from, so let's say this year, from January 1 until December 31st.
Okay.
So that's how that's paid. That one's simple. Non-ad valorem is the city tax, usually the smaller chunk on your tax bill. Sometimes it's bigger, depending on any assessments or anything. But usually the smaller one, and that's paid forward in November based on an October 1st to September 30th year.
Okay.
So you're paying your county tax and city tax, or the ad valorem and the non-ad valorem tax, in November, hopefully, that's where we're going to get to get a discount, but they're both getting paid and applied differently.
Okay, so where do you look on the tax? Let's just use Broward County. Where would you look to see the difference?
So on your tax bill, it shows you a breakdown of every single line item that you're getting taxed.
Like you're paying for the fire department,
exactly.
Right?
Fire department, trash, whatever it is for your municipality and the county.
And it says ad valorem, not ad valorem?
And then it has different sub items underneath. So like under the ad valorem, it'll list more because it's usually the higher portion. So it lists all the different things. I don't know what they are off the top of my head, but they're all the different items under the county. And then it'll say the amount, and it totals it up. Total ad valorem tax is this. And then it'll show you the non-ad valorem, which is where, you'll get the city trash or the fire or something like that. And it'll have it itemized there and then tallied there. And then there'll be a total tally of the total amount of taxes, which is what your tax bill is.
Oh my gosh. Okay. So that's the other thing. So most people would want to close by December 31st.
Definitely.
And why is that?
Well, closing by December 31st should, not always, allow you to establish your primary residence by January 1st, which is the key deadline for Homestead. Not applying for a homestead, but declaring it as your home, your primary residence, your home base, basically.
Right. So if I bought a place that recently had just lost its homestead, and now I'm not closing till the following year, I'm going to lose a whole year of homestead, right?
Pretty much. But then the following year, you make the application after, I think, March 2nd or March 3rd. It changes every year. This year, I think it's March 3rd or 4th. So you would make the application before or at that deadline, or it's in between March 3rd or 4th, and it goes until the following March.
Okay.
Then it'll apply the following year's taxes. So you have to make the application when the application.
Can't do it before March?
Can't do it before March. It won't
Okay,
apply.
so explain this, because this is where I think it gets a little hairy. So
You can file the application.
Okay.
You can do that at any time. It's just when
okay.
it's going to be applied.
Okay.
So sorry.
So if I close on January 2nd, which opposed to closing on January 31st, how does that adversely affect the buyer?
Well, January 2nd or January 31st?
No, I'm sorry, December 31st or January 2nd. I'm sorry, excuse me.
If you can close on December 31st and make that your primary residence that day before January 1st, that's where you move all your stuff in, and you declare that as your primary residence, then for that following year's tax cycle, you can apply for homestead. If you do it after that, then it's going to apply the year after.
Right.
So it carries to the year after. So that's the difference.
So basically, you're losing a whole year. If I close on January 2nd, it's that whole year that I'm not getting those taxes.
Exactly. But then...
Could you be still getting the old owner's taxes that year?
You can. And so...
That could be a benefit.
It could be. But then the following year, it's going to raise anyway, regardless. I mean, chances are it's going to raise. You're buying a property. Chances are you're paying more than the previous owner.
Person, yeah.
Whenever it may be. Sometimes it's not the case, but
most times
more times than not it is. So the tax bill and the value of the home is going to raise. The tax bill is based on the value of the home. The county will usually set the value, usually based on the purchase price, but if they can audit that and change that as well. So they set the value of the home in whatever way they do, and then the tax bill is based on that. When you file for homestead, I think on average in Broward County, I was looking, it's a savings of anywhere between $500 to $1,000 every tax bill.
Right.
So your tax bill will definitely increase, but you have a savings on that increase.
Okay.
So,
and then we could also talk about portability.
So portability is great. It doesn't transfer the homestead exemption. You have to apply for the homestead exemption still when you move, but it helps transfer the savings that you have on the property. So your savings that you've earned, say you've been in a house for 30 years, you have all these savings on the taxes that you've been accumulating. It helps move over to the new property, so you're not hit that hard with the new tax bill, because you're most likely going to be increasing the value of that home.
Or sometimes you're downsizing, which then is tremendous.
Even if you're downsizing, though, you still might be increasing the value of that home you're moving to.
Possibly.
So it might be a lower amount than what you're paying currently because you're downsizing, but the tax bill is going to rise with the increased value of the home.
But I've seen where, like, let's say I'm selling a $750,000 house. Now I'm moving a $250,000 condo. Now, yeah, you might have bought that house for $250,000, but now it's $750,000. You've had all these savings for all these years. You take it over to the $250,000 condo, and I've seen where normally their taxes would be $5,000, but now they're going to be somewhere around $2,700.
Yeah, it's the county evaluating the property at the value that it's at. So the tax bill, I haven't seen many drop, but it happens. But most of the time, it's gradually going up.
Well, so you don't see as many drop probably because you're not really looking after they've closed.
Exactly.
Right? I'm
exactly.
like trying to show people, hey, if you downsize from this house, and this is what it's going to look like from you, or if you're upsizing, like I've had it where I've had to actually explain to the mortgage broker, they've given my clients an estimate, and I'm saying, did you use what their future payment's going to be? It might not be this year, right? But I want them to know that it's going to change in that future year afterwards, so that they have an idea.
Definitely.
And sometimes people's savings could be $200 a month.
Which is great. I mean,
it's tremendous.
Saving money is making money. So
exactly, that's why we're here today.
That's exactly why we're here today.
Yeah.
So
Plus, we also want to make sure that, like, if people are thinking about buying or selling, that they have the right person to talk to. And, I can give you the basics, and I'm very good at that. But sometimes you need a lawyer, and you want to make sure that the lawyer that you speak to is educated and has been doing it for a while. Then you guys have a team of lawyers at your facility.
Yes, we do.
And they do so much for the realtors, So that's another thing. So, we want to get the buyers and sellers to come. And then, the other thing is that sometimes people are quick claiming homes that they probably should not be doing that on their own. Somebody says, oh, just go to the courthouse, just do this. And honestly, Nick is that person that you should be calling before doing that.
Definitely.
Yeah.
I've seen way too many horror stories with people that have done it on their own. They haven't done it correctly. I just helped somebody who got divorced, and they didn't do the deed properly. It was a refinance, and somebody helped them. I don't know who it was. It was a title company, I believe. And there was an issue. Now it's 5 years after their divorce. They haven't spoken. So I had to track down this person to try to find them, to try to have them sign a document, which they were arguing with me that they didn't want to. And I had to explain that, look, you have a divorce paperwork here that says that. So it's a situation like that where it can get really muddy, really hairy, and it's all because somebody didn't do the diligence.
That wasn't my deal, was it?
No, it was not.
Because we had one like that.
We've had a couple, but it was not that one.
Yeah.
So.
I mean, yeah, this is making sure your paperwork's done right is a big deal. So sometimes you could be causing yourself more harm than good when messing around with your title on your home. We'll go to commercial break. When we come back, I want to talk about breaking the title. That's another thing that we should really focus on, is that if I do something to the title, how does that affect my title policy? Mm-hmm. So we're going to go to commercial break, and when we come back, we're going to find out, if you mess around with your title, are you breaking your title policy, and are you no longer covered? Stay tuned.
At JK Closing Attorneys, we do all of the same things that a title company does, but with the benefits of being a law office. We can help with residential real estate, short sales, commercial real estate, refinances, 1031 exchanges, and FIRPTA withholding.
Contact JK Closing Attorneys today at 954-332-3111. Again, that is 954-332-3111.
Whether you're buying, selling, refinancing, or building your dream home, you have a lot riding on your loan specialist. Max Fish, a top 1% mortgage loan officer in the nation, will give you a same-day qualifying quote. Max Fish is committed to providing his customers with mortgage services that exceed their expectations. Ensuring that you make the right choice for you and your family is his ultimate goal. Contact Max Fish today at 954-729-6933 or max.fisch@nwmcorp.net.
You have been watching Making Money with Laura. For more information, contact Laura Sanders at 954-650-0827 or visit her website at theloracell.com. And now back to the show.
Hi everyone, welcome back to Making Money with Laura Sanders, and I am your host, Laura Sanders. We are talking about so many different things. First, we're talking about your homeowners, not your homeowner. Oh. We're talking about your taxes. Oh my
Yes.
goodness gracious. We're talking about your taxes. We're talking about when you should be applying for Homestead, talking about portability, making sure that you click off on that form when it asks you, have you just sold another property? Something else that I've been thinking about before we jump over to talking about, messing with your title policies is when you get divorced, who gets the portability? Can it be split? I don't think it can.
Well, it depends, because somebody's going to lose that homestead on that property if it's not sold right away.
Yeah, but what if they sell it right away and they both buy properties right away? It's whoever jumps the gun first, right?
I would assume, this is me, I haven't had this situation before, so I'm not sure. Both of them had entitlement to the homestead exemption, the homestead, the great benefits of homestead. So I believe that both of them would have a claim if they were to purchase a new home. A lot of times people rent, immediately after a divorce or something. But if they both were to purchase a home, I think they both would be able to be entitled, because they each individually, and that's if they individually both applied for homestead, because one person doesn't automatically receive homestead. Let's say somebody owned the property, it was their homestead, they got married, they added their now spouse to title. That now spouse might not have homestead automatically in the property. They do constitutionally, but that's different. But in terms of county taxes and stuff like that, how the property appraiser sees it, they might have to file their own homestead. So in a case like that, the only person to be able to either use the portability transfer or have the benefit roll over into a new property after application, of course.
I just thought of something. I just had some people sell their house, but I just realized, and you guys did the closings, and I just realized they never got divorced. Now they're both going to go apply for homestead, but they can't.
They can, but
No, but only one person can if you're still married.
when are they getting divorced, or are they?
That's a great question, but you know what? I didn't think about that until about the homestead and applying and not being divorced yet.
There's definitely a lot of wrinkles.
Yes.
So it really depends. I mean, a lot of the time I tell people before if they're telling me they're getting divorced and they don't have an attorney working on it, they need to meet with an attorney first to iron out these little details.
Right.
A lot of the times they don't. They're doing it either amicably or, without help, and then they miss a lot of these details, and then it falls on title to fix them.
Let's go over to your actual deed itself. So what I've seen sometimes is people will, number one, you get a mortgage and then you try to switch it into like an LLC because they think they're protecting themselves. That is a problem with a mortgage company, because they could do what's called a due on sale clause, which most people are not aware of.
Definitely, transfers to an LLC are, especially if it was a homestead property, but regardless, are the most likely transfer to raise a red flag with the county. And that's in terms of valuation of a property, raising property taxes.
They would take your homestead away because you're not an individual.
That too. And this has been a trigger for a lot of counties lately to audit the property. We've had it before where we've done a quitclaim deed. We advise everybody that we do a quitclaim deed for, when they're doing it into an entity, especially, we do it for everybody anyway, that the transfer may trigger either an audit by the county, or it may trigger new property taxes, a raise, or new property taxes due. So when there's an LLC, you're automatically taken out of an individual's name. It's a completely separate entity. It's not like a trust or anything like that. It's not an estate. It's a business. And what I've seen, and I saw this recently, is somebody's taxes jumped about $10,000 because they bought a property.
They won't go back and fix it.
No, I mean, there's ways to appeal your taxes. There's the Value Adjustment Board.
Yeah, but that's like...
You still have to pay 75% of your taxes, and a large chunk of it when it's due, to not get penalized later on. But the transfer into an LLC could really lead to a lot of money being due and owed the next roll around of your taxes. It just happened. I just saw it with 2 or 3 clients who did it.
Yeah, and we've seen also where there's been issues where people have transferred the deed out of like doing that, and now there was a title issue and that broke their chain of title. So now they're no longer covered, and people are like, oh, well, I'm sure it's fine, right? The house has been sold. Yeah, things happen. Sometimes people don't have people sign off, and then those people die, and you can't go back and find them. Now you got to find their heirs, and if they have 10 heirs, you got to get all 10 heirs. I mean, and you can't even fix it because you don't have a title policy. What a nightmare.
I just got contacted by somebody who, there was a divorce, so speaking about divorce, there was a deed from parents to son and his at the time girlfriend. So
Yeah.
I don't know the fact. It was in the middle of the 90s. I don't know why that was done. Then son and girlfriend got married.
Okay, at least they got married.
And then got divorced. And then they did a deed after the divorce, but failed to put girlfriend, wife / whatever she was into the deed. So now the title went back to the parents, who are now deceased, and the girlfriend still has an interest in the property. So now we have to find her. She hasn't been involved in the picture for 30 years. And now we have to find her to sign off her interest. That didn't break the title, it just messed up the chain of title. But now we have a messy chain of title, which can really...
But you found her.
Came on my desk this morning.
These are the fun things, aren't they?
Yeah, they're very fun.
So if somebody is looking to buy or sell a home, want to get guided the right way, want to change, they're getting somebody to sign over a deed to them, what's the best way for people to get a hold of you?
You can call me. My office number is 954-779-5000, or you can shoot an email to Nick, N-I-C-K, at JK, like just kidding, but not really, jkclosings.com.
Okay. So, and if you're thinking about buying or selling a home and you want an agent that has a lot of experience, knows what they're doing, we'll get the deal done. And really, I seem to spend all my time doing this. Definitely give me a call, Laura Sanders, 954-650-0827. LauraSell.com is my web address, so you can check me out there. You can check out my reviews, and you can check out some properties. We're so thankful that you listen to us every week. And again, if there's anything that you think is pertinent to tell our audience today about taxes, about title, we've got about 1.5 minutes left to let them know what your suggestions are.
100% just be careful with title. If you're doing anything with your title, contact an attorney, contact me, contact my office. It will prevent any problems down the line. And taxes, we didn't get to talk about it, but there's a benefit of paying your taxes early. You get a discount. Mm-hmm. Florida's great for that. 4% discount if you pay in November, 3% December, 2% January, 1% February, and then it's due in March. So if you pay early, you get a big break, 4%.
And what happens if you don't pay in March?
If you don't pay in March, there is a delinquency, and they can put a tax certificate on your
How
property.
fast do they do that?
If it's not paid by June 1st, it will be sold by June 1st, I believe. So very quickly after March. I mean, if you think about it, 2 months is not that long of a time period. And after 2 years, if you don't pay it, it can be sold at auction.
So the person that got the tax certificate, though, they don't get the property. It's still sold at.
They don't get the property. There's 2 years. What they do is
they get interest.
They get interest. So at the time, whenever you, as the owner, can sell it, you sell it. You have to, or not sell it, pay it off. It's a lien on the property at that point. It's a first lien. So you sell it off. You have to pay all interest on it, and you can get that tax certificate redeemed, meaning your property will be clear. If you don't do that, then what can happen after the 2-year delinquency mark is that tax certificate holder can file an application, which will then lead to it being the property being paid or sold at auction, which they have a right to go, purchase it there, the investor, whoever buys the tax certificate. and then you can lose your property for not paying your taxes.
So as you can see today, that it is really important that you have the right guidance when it comes to your property, your taxes, what you're doing, when you're doing it. I always remind my clients to apply for Homestead. I also send them every year at the end of the year for their taxes, their closing statement again, even though I sent it before. Lots of stamps on
Very
that.
important.
Stamps are expensive, like 71 cents, 72 cents. Anyway, again, if you're thinking about buying or selling, give Laura Sanders a call. Till next week, thank you so much for listening and live streaming with us.